Hey everybody, this is Rihely from H2R CPA, tax partner in the Beaver office. Hope you had a great Memorial Day weekend. If you're anything like me, you spent the time enjoying your kids, doing some house projects, and reading the tax law. Since 2006, I've helped business owners understand the tax implications of their business decisions. So today we're going to be talking about the federal estimates that are coming up for 2020 and some factors they need to consider stemming from COVID-19. So who must pay estimated tax? Generally, if you expect to owe tax of $1,000 or more when the return is filed, you must make estimated tax payments. Commonly, this would be for sole proprietors filing a Schedule C, partners in partnerships, shareholders of S corporations, and LLC members. Other cases may be individuals with significant investment income, rental income, or under withholding on their W-2. There is a penalty for underpayment of estimated tax. This penalty is interest paid on the underpaid amount for the number of days the payment is late. The interest is charged daily at an annual rate, which has been 5% in recent quarters. So when to pay estimated taxes? Generally, the estimated taxes are paid quarterly and are due on April 15th, June 15th, September 15th, and January 15th each year. Under IRS Notice 2020-23, the IRS postponed the deadline for making payments to July 15th that were otherwise due between April 1st and July 15th. This means that the 2019 tax due, the first and second quarter estimated tax payments for 2020 are now due on the same day, July 15th, 2020. So here's some considerations for the 2020 estimated taxes. The IRS provides for a safe harbor that taxpayers may meet to avoid the underpayment penalty on estimated taxes. The first test is if the taxpayer can pay 90% of the tax shown on the 2020 return. Somewhat more commonly, if the taxpayer pays 100% of the tax shown on the 2019 return or the prior year return, or pays 110% if the taxpayer's AGI is over $150,000, and that taxpayer may avoid the underpayment penalty. This year, tax projections will be extremely important. They'll be especially important to make sure that you're meeting your payment requirements while also conserving as much cash flow as possible. Nearly all businesses have been affected by COVID, whether they were negatively affected or positively affected, depending on the industry. 2020 is certainly going to be different than 2019. Coupled with businesses getting PPP loans and the potential tax effects as a result, it would be prudent to run these projections, not only for estimated payment purposes, but potentially identifying tax planning opportunities in this year of change. When you go to file your 2020 return, if you are potentially subject to the underpayment penalty, the IRS does provide a mechanic called the annualized income installments that allows you to allocate your taxable income to certain periods during the year rather than assuming that your taxable income was accrued equally throughout the year. This will likely come into play this year with so many businesses being shut down or otherwise seeing a downturn during the pandemic. For self-employed taxpayers, there are new tax laws that have come out during this pandemic that may have an effect on the estimates for self-employed individuals. The specific details of the qualifications are outside the scope of this video, but here are a few things to think about. Under the FFCRA, there are credits allowable for paid sick leave or paid family and medical leave, able to be taken advantage of when estimating the self-employed individual's tax estimates. This is, of course, assuming that the individual meets the requirements laid out on the FFCRA to take advantage of these credits. Under the CARES Act, the taxpayers who have not had a PPP loan forgiven are eligible to defer 50% of the taxes imposed under Internal Revenue Code Section 1401A. Effectively, taxpayers are eligible to defer 6.2% of their self-employment income. The amounts deferred, essentially an interest-free loan, are due 1/2 on December 31st, 2021, and 1/2 due on December 31st, 2022. There are state considerations as well. Pennsylvania and the PA local earned income tax municipalities have postponed their filing and payment deadlines in alignment with the federal deadlines. Many other states have done the same, but please verify if you owe tax outside of PA what those specific deadlines are. We hope you found that helpful. If you're a closely held business owner, please reach out to us at h2rcpa.com, and our team will be happy to learn about your business and see how we can work together moving forward. Thanks everyone for listening, and stay safe.